Before we get into today's episode, I just want to remind everyone SBA Today is now available on podcast streaming services. Catch up on all the latest news in the world of SBA with our beloved co-hosts Tanya Mazurik and Paul Long. I love the show because I always learn a valuable lesson listening to their real life stories, and the way they deliver it and tie it back to what we do makes the show really entertaining and really fun to watch. Critics are calling it Regis and Kelly meets SBA Connect. Check it out today, and don't forget to subscribe to SBA Today. Today on the podcast, we sit down with my long-lost brother, Jonathan Smith, and you'll understand what I mean by that after hearing this episode. Jonathan is head of SBA lending at Northwest Bank, a real up-and-comer in the SBA space. I saw his LinkedIn announcement a couple months ago, and I saw all the comments, and I was like, oh, there's something going on over there. In fact, after the Fundex fallout, his shop was one of the few shops I was really considering going to. And during that process, I asked him a question. I wanted to know what separated his shop from all the rest of the shops. And he shares that with us today. We also have a candid conversation about titles. We talk about underwriting large M&A transactions, which will be a big focus for his bank, and his ambitions to get to the top 10 most active SBA 7A lenders in the country. This episode is jam-packed, so without further ado, let's get into it. If you're an SBA BDO, you're probably getting multiple calls every week from recruiters telling you about an amazing opportunity at an incredible shop with an open credit box and a strong comp plan. You got to at least hear them out, right? The truth is, most good BDOs can't move because they'd be leaving too much on the table for it to make sense. But alas, all good things must come to an end. When that time comes, how do you decide that critical next step? You need to talk to an industry insider who knows the market inside and out, an advisor that can cut through all the BS and tell you what it's really like to be a BDO at this bank or at that bank. Baker Lewis has 30 years experience, not just in recruiting, but in every aspect of SBA lending. They know the business and they are committed to helping people make the right move, even if that means they don't get a placement fee. If the time has come for you to consider a move, I'd encourage you to partner with an advocate like Baker Lewis, who will help you evaluate the market the way they would if they were making the move. An agent who can help you get the deal you didn't think was possible. Let me tell you folks, anything is possible. Call Baker Lewis.
Oh, Jonathan Smith, where do I even start? Thank you for coming on the podcast.
Yeah, thanks for having me.
I just met you a few months back, and it was really interesting because we had some commonalities that were pointed out to both of us. You pointed some out to me. Let's try to connect the dots here. So we know David Hewlett.
Yeah, great guy.
Great guy. He was your BDA?
Yeah, I like to say I taught him everything he knows. Probably didn't teach him everything, but I got him started.
Okay, and I got him the rest of the way.
Yeah, you finished it off, yeah.
And
now he's doing better than both of us.
That's very true. Very true. And that's how it goes, though. You always want your kids to do better than you.
Right, yeah, that's a good way of putting it.
Even though he's like 1 year younger than me. And then George Andreas.
Yeah, it sounds like he gave us both our start in this world.
He didn't give me my start, but he was one of my first bosses. Technically, Tom Zernick hired me. Technically, Chris Hearn hired me into the industry.
Okay.
Tom Zernick gave me a shot as a 7A BDO. Then George came in, and by that time I was probably 23, 24. So, of course, he was very, integral in my going from financing pizza shops to
bigger and better things.
Yeah. So that makes us brothers that were separated at birth.
I think that's what that means, yeah.
So welcome. That was quite an intro. If for those who don't know who you are, can we do a little background on you?
Sure. What do you want to know?
I mean, I'm going to just say it. I mean, the people want me to say it, so I'm going to say it. How did you get into SBA lending?
I mean, it's not that long of a story. I'm a New England guy, born and raised in New Hampshire, went to school to teach history, and then found out it was hard to make money and pay back the student loan. So luckily I had a minor in accounting got a job for a company called Direct Capital doing small business lending for equipment financing. That's how I got into small business lending. And that group had an affiliation with BLX, which was an old non-bank SBA shop, and we used to refer business back and forth. And that's when I kind of got to know a little bit about SBA 7A lending. Really thought the BDO position was pretty unique. And from there, still doing equipment financing, a couple other firms, developed a relationship with CIT. And the BDO, who was local in New Hampshire at the time, worked for George. And she was leaving, going on to another bank, told me that position was opening up. So I called George every day for 30 days and said, give me a shot at this BDO thing. And at the time, I thought maybe George wasn't interested. But as I got to know George, I just know he's bad at returning phone calls.
And George actually saved those voicemails, and we actually have one here to play. I'm just kidding. You weren't at BLX, you said.
I never ended up going to work for BLX. They kind of folded up before. We just referred a lot of business through the equipment finance company. So the equipment finance company would do small ticket leasing up to $150,000. And as we were talking to these small businesses across the country, we'd ask questions. Are you doing any real estate purchases, acquisitions, anything in addition to the equipment financing? And if it was something that fit the SBA box, we would then refer it up to BLX. But because of that relationship, I got to know the industry, got to know what SBA financing was all about, and what you could do within the 7A program.
Our last interview was Lane Rhodes. She just walked out. You guys obviously crossed paths while you're coming in here, because we do these back to back. Were you both at CIT at the same time?
No, we were not there at the same time. As you probably have learned throughout your time in the industry, there are a lot of people who cross through CIT. I mean, they were the number one SBA lender for 9 years in a row, something like that. And I think at its height had close to 100 BDOs.
Yeah,
and
that's correct.
No,
I wasn't there.
Yeah, over the course of all those years, a lot of people came through, and some we crossed paths and never knew. But as far as I know, I don't think Lane and I were there together very long, or at all. I wasn't there all that long, because when I went there, it was 2009, 2000. I think it was 2000. It was around 2009, 2010, and you
got there pretty late.
Yeah, I was pretty late to the game for CIT.
You got there somehow after she got laid off, I think.
Yeah, possibly.
I don't even know how that worked, but yeah, she was telling us she was on a call with all her friends, and they did like big layoffs and stuff.
Yeah, and I think they tried to resurrect the team after they had all of those issues, and they brought a small group of us on, and I was there for 9 months and closed 0 deals because they weren't doing anything.
You got sold a bill of goods by George.
Yeah. Well, I don't know that George necessarily knew that, because he stayed even after I left. And now look, they're still around, right? Still doing deals, but not
with
really.
CIT?
Yeah, but not really in the 7A space. They're more 504 now.
Yeah. They're like a bank, right?
Yeah, they are now. Yeah.
Who do you think is like the CIT of today?
Well, you can draw a lot of parallels to a ReadyCap. They're in the same area. I think they have a lot of the same employees.
Well, used to.
Yeah, right. Yeah, the last couple of weeks have changed some things there.
I don't know when this is coming out, but yeah, that's true. And they are big. They're top 5, top 4.
Yeah, I don't know that there's a CIT today that back then. I don't even really know what their focus was. I think business acquisitions was a big focus. A lot of lenders. Back in the early 2000s, and I wasn't even in the industry that long when it started to change, but a lot of lenders had a focus on like 1 or 2 products, or 1 or 2 industries, 1 or 2 loan types, whether it was, business acquisitions, real estate, GE Capital, from what I remember, it was really big into real estate. UPS Capital was big into business acquisitions. Whereas today, I think a lot of the big lenders are banks versus
Right.
the non-bank lenders, which kind of dominated the industry back then.
That you're right. That's a big difference. Is like when you have GE and CIT. CIT was pretty big company, right?
Yeah,
Like,
huge.
huge. GE. Who's that other one that really went? Lehman Brothers.
Yeah, Lehman had a pretty big SBA shop.
Nowadays, the non-banks are a lot smaller. I mean,
Yeah.
people are scraping together a few bucks and getting a license and getting some warehouse lines, and the difference there is you got to kind of do it skinny. You got to do it smart.
Yeah.
And when I say smart, I would say actually short-term profit type of smart. Like you really have to watch the expenses coming out before revenue. It's hard to, burn $5 million building out some infrastructure that and management programs and all this stuff to get to a certain point to then reach that scale of having 100
Right.
videos.
Right. Yeah.
Just doesn't exist anymore.
Yeah. I don't know of any non-bank lender right now that's up to even close to that level.
Well,
Harvest
no.
got pretty big. I don't forget, they must have 50 or so BDOs now. They do a pretty good job, and they're very focused on real estate lending.
Yeah, I was thinking that they would be some of the closest to that CIT model, except flipped into real estate.
Yep.
But you're right, it's banks, and even Newtek is a bank now.
Yep.
So they don't count, but they don't have a BDO model.
Right. Yeah. They're and I don't know a lot about Newtek other than that they're one of the few that have been up in that top 10 for a really long time.
Yes.
But yeah, I think they have more of the inbound business model.
Yep.
A lot of people answering the phones. They do really good ads and drive business that way versus
Really good ads?
Well, we look at the volume they're doing. The ads are doing something. Good, I guess.
They do ads.
Good ads isn't the right way of putting it. They do.
No
ads
offense. No offense to Newtek. There's lovely people there.
They got the salamander, right? I mean, come on.
Oh, yeah, you're right. Some of the people that taught me what I know about the business are there in their 504 group.
Okay. Yep.
Great. That's a great team, the 504 group.
It's no secret that most entrepreneurs are busy, and getting them to focus on their underwriting checklist is a full-time job. So when it comes to the business plan, projections, and assumptions, I'm a huge proponent of bringing in an expert. Rapid Business Plans is a trusted partner to small business lenders and their borrowers. They make it easy for entrepreneurs to tell their story in a format bankers love. Their team goes the extra mile to ensure everything is done fast and done right. And they're all based here in the US with employees across 4 different time zones. They just completed an export business plan for one of my borrowers, and they were super happy. We got their CRE expansion loan approved, and now they can move forward in their business with a clear plan. Rapid also offers feasibility studies, which I highly recommend for any independent startup loan. So go to rapidbusinessplans.com for more information and set up your Get Acquainted call today. I'll leave a link in the show notes below.
So we talked about a little bit about 08 and 09 and all the craziness there. What's going on now, today, 2024? The last 12 months or so. Are you seeing what I'm seeing in terms of just shakeups in the industry?
Yeah, there seems to be a lot of shakeups in the industry. I mean, we just talked about some of the changes that at ReadyCap. I don't know that it's necessarily a shakeup. I don't know a lot about ReadyCap.
We just know John Mosier resigned. He put that on LinkedIn.
Yep, that was out there.
He's been the CEO.
And he's been there. He built it, right? He's been
Technically,
there.
I got there before him, just for the record.
So
3 months
you
before.
deserve some credit.
Exactly. But that's a long time. You're there a long time. First of all, that's it says a lot anyway. I mean,
Yeah, you don't
it's
see
hard.
that a lot in any industry these days.
Right there, you get a trophy just
Right.
for staying.
Yeah.
But I mean, they built it from scratch to top 10 and then top 5,
Mm-hmm.
and then he left. So that is news, and that's a shakeup. I am no longer unemployed. I'm happy to announce, but that was a shakeup. And then you're just seeing a bunch of different things all across the board from some of the large banks. I'll just say PNC because they're not listening. They're too big to listen to this podcast. But they
A lot of people left there, right?
they did big layoffs,
Yeah.
and basically in their SBA department and in general,
Yep.
there was a big number. That was a headline. Anyway, I don't have to list all of them, but what's going on?
Yeah, I don't know that it's necessarily unique. Maybe it's just what's happening right now. You see this in SBA lending, every few years. one bank gets out of it that's been doing it a long time. A big group of BDOs leaves that bank, goes somewhere else. It wouldn't surprise me if some of the banks that are getting out of it now get back into it, 4 or 5 years from now, because I've seen that quite a bit as well, where, you don't necessarily need to name banks, but there'll be a top 5 lender. They decide they're out of it, and then 5 years from now, somebody will have a brilliant idea, like, what we should do? We should do SBA lending, and then they'll build it back up. So I think right now we're just in one of those periods where you're coming out of COVID. Everyone keeps talking about recession, though the economy is still booming. Inflation's still there, kind of lingering. So I think there's a lot of unknown out there, and everyone's trying to reposition themselves and determine what are the next steps, and that is. For some banks like ours, it's let's build an SBA division, and for some others, it's let's scale it back or eliminate it altogether.
Yeah. So speaking of your bank, which is Northwest Bank,
Yep.
which I learned is that because of the northwest corner of Pennsylvania.
That's right. Yeah, we're nowhere near the northwest part of the United States,
and not to be confused with the other Northwest Bank.
Yeah, I'm sure there's other. I don't know how many there are, but I know
there's another
at least
one. Yeah,
a couple.
But that's where you're at now.
Yeah.
And you're head of SBA lending. They had a program in market, and you're basically bringing it national type of thing.
That's right. Yeah, we're expanding on the foundation that they built. I mean, it's still relatively new, even for the in-footprint team that we're expanding on. That's just over a year old. Lending within the 4 to 5 states where they have a footprint, or we have a footprint. Now we're expanding national, building out the team. Going from a group of seven BDOs, sales manager, underwriting, closing. I mean, all the pieces were there, and then they hired me to scale it up.
Yes, and then that's when we got connected, because this was all happening at the same time. My shakeup was happening, and so we started talking. Spoiler alert: I don't work there today, but we had some good talks. There was a point. Well, it's like with anything. Like, I talked to a bunch of people, and there was points where I was like, "Oh, I'm picturing it now," and I'm like, "This is where I'm going." I think it, but then you want to do your due diligence, and that's for anyone, because everyone wants to make sure it's the right fit on both sides, so that it is a success, and that's how you avoid jumping from shop to shop, is by having these conversations.
It's got to be a fit for you. It's got to be a fit for where you're going to be going. Both sides.
Yeah. But that was fun, because that was on the earlier part of my journey, is having those conversations with you, and it was really exciting stuff what you're doing there. I mean, the vision is big. You guys are shooting for the moon.
We want to be a top 10 lender. I mean,
you're going to announce it here.
Yeah. I mean, we want to be. I think that's anyone who's getting into this space, that wants to do it seriously. I mean, the goal is to do SBA loans. The goal is to do loan volume.
Top 10 is overrated, though.
Yeah, I mean, it's just a number. You don't necessarily. And I shouldn't say that the goal is to build a strong SBA portfolio that that we can be proud of, that I can be proud of, the bank can be proud of. Whether whatever number we end up at over the years is somewhat irrelevant, but. We want to put capital in the hands of small businesses nationwide.
Well, top 10 is based on what other people are doing.
Right. Yeah, exactly.
Like, really, I mean, that means that's basically saying today you would be having to do, let's say, $400 million of production.
Right. And that's going to be different 3 years from now or 5 years.
Yeah. And, $300 million used to get you in the top 10, by the way, but inflation.
Right.
But $300 million is a solid number. That would be like a good number for me. I'd be very happy with 300 million.
That's a respectable number.
But why is it so hard to do? You would think it's easy, because you think of some BDOs like David Hewlett, who can just, we say do 60, but there's a lot that goes into it, and you need a whole team and all this stuff. But like, couldn't you just get like 5 or 6 or 7, maybe 10 BDOs, and then underwriters, closers, you put it all together, you do the 300 million. What's the big deal?
Yeah, well, I mean, theoretically, I guess you could do that, but I mean, if you really look at the SBA market, your superstar BDOs which I think are probably less than 3%, are 20 million plus producers. I think the vast majority of the industry are probably 10 million, 8 to 10. And then there's a bunch of people that are probably a little bit lower than that. And then there's a handful that, like the David Hewletts, that are doing, 50 million plus. I mean, I've been doing this for almost 20 years. And I think my biggest year was probably 40, maybe 50 million. But that was, when I was at a bank where I was in a similar role to I am now, but I was producing and I had a lot of help. Just me doing deals myself, no BDA, just out there grinding it. I think 40 million was the biggest year I had. And I know what I had to do to hit that number. And you can't expect everyone to put in those long hours. And
what did you have to do to hit that number?
You had to, essentially be on all the time. If your phone rang, doesn't matter if it was Saturday or it was late in the evening, and you kind of had to be available to your clients. Nowadays it's a little bit easier with, you can text them back or, do a quick email on your phone, versus when I first getting into the industry, didn't necessarily, I'm not that old, but texting was not as common as it is now.
It was not professional.
Yeah. No, you're right. It wasn't. You would never text a customer, back in like 2009, 2010. You barely texted your friends.
That's money.
You're right. Yeah, exactly. It's not just get 10 BDOs and everyone does 50 million. Everyone, you have to build a credit box, a credit culture. You have to get referral sources to buy into what you're doing. And, the industry has to promote that type of volume. Like back, 2022, 21, 22, coming out of COVID, it was pretty easy to do 20 million plus. At least I thought it was. You're coming off of, all the CARES Act stuff. There's business acquisitions were, kind of really get, ramping up into the, what are they calling it right now with all the baby boomers?
The silver tsunami.
Yeah, the silver tsunami was beginning, and that's still ongoing. So there's a lot that you have to put in place to do that type, of loan volume, to do 300 million plus. Not every lender wants to do
now
that.
It sounds hard.
Yeah. Some lenders, I know there are a lot of good lenders out there that have been doing this for a long time, and they're like, yeah, we're a 40, $50 million, 7-8 person team, and that's what they want to do, and that's fine for them, and that's okay too.
That's perfectly fine. I want to go back to the job interview. You grilled me very hard on our job interview.
I don't know about that.
I don't appreciate that.
I've never been known to be someone who grills people.
Did you even ask me a question?
My interviewing style is probably more similar to what we're doing here. It's to have a conversation. I don't necessarily go into an interview with a list of questions that I'm going to ask, these 5 questions, and one of them is going to be a trick, and see how they answer it. Like, what's your 5-year plan? I have a general idea of things we want to talk about, but it's more just a general conversation. We're all professionals. You're a known entity in the industry. Most of the people I'm talking to for positions at Northwest are people I know, people that I've worked with before, that have been on my teams before. So it's more or less of having a conversation to make sure that this is a fit for both of us. And sometimes it is a fit, but I think you would have been great with us, but you can find another fit that's maybe a little bit better.
Yeah, that's true. So tell me about a time you failed. I'm just kidding. That's funny.
You grilled me pretty hard, right?
I just asked the questions, but it's like good questions to ask. I feel like the big boxes to check are like credit culture, which I feel like we did check that box.
Yeah.
You're doing M&A deals. You're going up market. We loved that. Even doing some pari passu stuff. That was exciting. Underwriting M&A is like, it's different. Like, I underwrite it like I'm a buyer.
Right. Yeah.
Like, it's qualitative, it's quantitative, it's buyer profile. Is it the right fit? But if you don't understand all that, you're basically just looking at, collateral, cash flow, 5 C's of credit, and you're not going deeper. And then it's going to be really hard to get those deals done. So I don't think there's a ton of competition actually in that space. I think a lot of banks feel like it's actually really risky.
Yeah, the the old bank mentality, which I don't even know how old it is. I mean, it's probably, as old as banking is that collateral mentality.
Right.
Of, if there's no real estate collateral above a certain point, they have this mental block of, well, then it's no longer a good deal. It was a good deal at this level, but now we're up here, and even though the debt service coverage ratio is the same or better, it's not a good deal because of the collateral piece. So it does take a different mindset to understand the M&A, philosophy, the M&A approach to, you're financing operating companies. You're not necessarily financing, a hard piece of collateral.
Right.
You're falling back on that this business is going to continue on and make money and pay you back.
Well, it's interesting because I feel like every SBA lender I've ever met says they're a cash flow lender.
Right. Yeah. Same. Everyone I've ever met says the same thing. And then you're like, great, here's a $7 million business acquisition, no real estate, 3 years of cash flow. And then now all of a sudden they're not a cash flow lender.
And it's cash flow deal all day long.
Right. Yeah.
It was because you didn't see the little asterisk.
Right.
And then down below, to a certain point, we need collateral.
Or it gets sent to the credit officer. And we've all had this credit officer in our SBA careers, right? Where you send it in, they're like, well, it's pretty collateral light. They're like, yeah, I know.
They have to say it, though. They have to get it out.
They have to.
It's so true.
It's like they can't help themselves.
So what are you up to right now? You're in hiring mode, basically. Are you done hiring, or?
No, we're still hiring. I mean, I will say I'm somewhat spoiled here at Northwest because I came in with an already incredible team here. With Lindsay Cost is our sales manager, and she's the one who built out that in footprint team, and she did an awesome job and has a lot of really good people. So coming in to absorb them already here, already part of the team, was that makes my job a lot easier because we've already got this great foundation built, and we've up to 5 new BDOs since I've come on. 3 new underwriters, a closing manager who's going to be starting in May. So we're building the team. We still have underwriters, closers, and more BDOs that we want to hire this year, and so we're not done yet.
We're like a startup type of vibe and pretty scrappy, and somebody wants pay that's just beyond what we can afford, and titles, like, cares about the title. That's a whole nother thing. I mean, you probably have been dealing with the titles. It's based on the last couple of years where it's gone out of control. Like, it's gone up.
Not just in our industry, like in multiple industries, right? Where the salaries, inflation, so the salaries have to keep up with inflation. So I get it.
Yeah, but that's still, like, the numbers still have to work though. And like,
oh yeah, for sure. We've all had people come in, right, and demand really, really high salaries that don't make sense, and it's not market. But for people like us who've been in the industry long enough, I think we know what's market and what people can command. The titles, my philosophy on titles is that everyone likes to say they don't matter, but we all know they do because they wouldn't exist otherwise. I think some places do a really good job of delineating what the titles mean in their organization. And I think I'll talk, Live Oak was where I came from here, and Live Oak is a great place to work, and I can't say enough good things about them. They don't have a lot of really lofty titles there, but going in, they say, here's what the titles mean here.
Interesting.
And when it's presented like that, you can say, okay, that makes sense.
Yeah.
Versus some other places, it just seems to be.
Yeah. Can we keep this title conversation?
Sure. Yeah.
Because like titles.
And once you get that senior title, right, the SVP title, a lot of people don't want to lose it, but some places it's tied to what your bonus structure is, or it's tied to number of different things, whereas other places the title, it's kind of meaningless because if it's a commission job, then the title doesn't really necessarily mean anything.
Yeah, this is really interesting because I think that perception of what a title really is a little off. I think it is more status based, where it's like, I am this title. I don't want to go backwards.
Right.
I want to do this job. I have this job. I want to continue doing this job. And that the place I'm going to, I'm doing that exact job. I have the same exact responsibilities, but my title just is different and less. And so I feel like I'm going backwards.
Right. And I think sometimes, depending on, the institution that you're going to, the title of certain positions can show how important it is to that bank or non-bank. What I mean by that is, over my career, I've ran a few different SBA shops, and I was approached by one that said, yeah, you're head of SBA lending. It's a VP title here. And which could be okay, except you look at some of the other divisions within that same bank and, similar, what you would think similar levels, that person's an SVP or an EVP, and you look at how they're approaching SBA lending, and you're like, it's not that big of part of your strategy, and you can just tell.
Interesting.
And that was a few years ago, and I was right, because they're not really doing much, and they're doing what I think they always wanted to do, and it's a respectable number, but it's not a huge part of their growth strategy.
Yeah, I just, in my gut, I'm thinking EVP for an SBA division manager, SVP for like closing manager or operations manager. See, I actually don't even care. I don't even know.
I think for a place where SBA lending is a critical part of their growth strategy and something that's important, I think EVP is an appropriate title.
That I feel
for head of an SBA division.
Yeah, and this I'm talking about mainly, commercial banks that are, 1 to 10 billion assets or under 10 billion in assets. SBA is gonna be, if you're gonna do it and do it right, and it's gonna be a significant driver for the bank.
How could it not be, right?
Right. So yeah, that makes sense, and I think when you get up to there, it has more to do too with like certain like levels of being involved in like directors,
Right.
being a director or whatever. But the AVP, VP, SVP, whatever for the lenders, the BDOs,
it probably doesn't matter.
Totally meaningless.
Yeah.
Totally it's a joke. I mean, when I went to Fundex, I came from ReadyCap and I was a VP, senior business development officer. And I was hired as a SBA business development officer. Base. And you want to know what I did that year? A lot.
Yeah, I bet you did.
Did a lot. And I was like, oh no, but my title.
Right. And after a while, people who were fixated on the title, I mean, I don't know of I've never met someone who didn't necessarily take a BDO position because they didn't get, a senior title necessarily. So I think once they get into the role, as long as the comp plan is what they want it to be and it makes sense for them, once they get into the role and they're generally happy where they are, that the title talk tends to go away.
Yeah, so we've been talking a lot about hiring and talent pool in this podcast. It's been a trend. We had Chatterbox on a couple episodes ago. You have been hiring people fairly aggressively these last few months. Is what we're saying correct? Is the talent pool tight? Are wages up? What are you seeing?
I wouldn't necessarily say that the talent pool is tight. Being in the industry for as long as I have, I've been lucky to only hire somebody that I know directly or know somebody that I know. I mean, it's like 2 degrees of separation with almost everyone I've hired. And most of them have been, I know them personally and have worked with them in the past.
Oh, wow.
So I've been really lucky. As soon as, how you put something out on LinkedIn, everyone sees where you are. My boss is a guy named J.D. Marteau. He and I work together at TD. Mm-hmm. He's pretty known. He's in the industry. He hasn't necessarily worked in the industry directly himself, but he has managed SBA divisions, meaning a lot of really big heads of SBA have reported to Jay. So he's known.
Interesting.
So, we have gotten phone calls as soon as the announcements were made, and they knew where we were because they wanted to be a part of what we were building. They knew myself, they knew him, and they said, I want to be a part of that. So that certainly helped in interviewing people, hiring people, and finding people that want to be a part of what we're building here at Northwest. And as I mentioned before, the foundation that was already here is really solid, and they have a really good team already in place. And I'm just fortunate that that's now my team, and we're continuing to build on it and continuing to get phone calls of people. I'm meeting with somebody, tomorrow night that I was introduced by someone I know who wants to be part of what we're building here.
Well, it definitely has a lot of intriguing aspects to it. You were around BLX, you were in CIT, you were at Harvest, TD, Live Oak was where you spent the last 4.5 years, up until, a few months ago. Did I miss any other big ones?
No, those are all some pretty big ones.
I've been doing my research.
Yeah, you have.
So you get to take the best of all of these top tier shops and put them into a pot and stir it all up and, start building this fresh thing. And you've got your guy there that has a good, reputation, and they had the foundation in place. So yeah, there's a lot of intrigue around it. So that's why I was like, interesting. In fact, I asked you to be on the podcast today before I even had any turbulence in my own career, because I know we were.
Yeah, it was pretty early on. It was like almost within a week of me putting it up on LinkedIn. You asked if I was going to be out here, and said, let's be on the podcast.
And then I was like, you know what, we should talk because I need a job. Now, be honest, are you relieved that you don't have to deal with me?
I was actually really looking forward to it.
So what are those? So we just kind of teased it a little bit, and I didn't ask you. We did no prep for this. But what are those?
Clearly.
What are those but I like it. I think this is one of my favorite interviews. What are those overarching principles that you are bringing in that you want to be the foundation of what you perceive to be a good shop?
Well, as you mentioned, I've been at a few different really big shops. Live Oak being, kind of the pinnacle of SBA lending right now, doing some really, really big numbers. And I've learned a lot at all the different places I've been, what I think works, what I think doesn't work. One of the first questions you asked me when we were talking about, you potentially come to join us was, what differentiates Northwest from all the other SBA lenders? And it's a really tough question to answer because we're all selling SBA 7A. We all have the same SOP. We can all do the same things, but we all do things differently. And as I was building this out, I knew that question was going to come up with multiple BDOs. It's going to come up from my bosses here at the bank. And one of the things that, like I mentioned earlier, a lot of these lenders early on really specialized in, we're a business acquisition bank, or we're a real estate bank, or we're really good at real estate for subpar credits, or we're really good at A+ real estate. And I always thought along the way when I was at a lender that they only wanted to do real estate, fully secured by SBA SOP standards, real estate variable rate. And I was like, okay, that kind of limits the box, but that's what they wanted to do. So that's what we did. But I always felt that, why can't you be really good at a lot of these different things? Be a really good real estate lender, be a really good business acquisition lender, franchise lender, do 7A, 504, USDA, SBA Express for lines of credit, put all that together. Because I've been at places where, all right, we're, most of us, right, really good at SBA 7A, but I can't offer a line of credit. Or 7A is what we do, but we're not good at 504. So let's be good at all of these different products that the SBA offers, and let's be able to fully bank these customers regardless of where they are.
Mm-hmm.
And that's what we're building here, is a bank that has all of these different SBA products. We'll do business acquisition loans. We'll do real estate loans. We'll offer fixed rates when that makes the most sense for the customer. We'll offer variable rates when that makes the most sense. We'll be able to offer a line of credit, and we'll be able to bank them, virtually if there doesn't happen to be a branch nearby. And I think that's what really differentiates us, is that we're able to do all of those things.
It's nice that you knew your boss coming into this, so you had that comfort because you worked with him at TD.
Yeah, that helps.
But have there been any surprises along the way? Not maybe from them, but maybe from, any of the parts that you've been dealing with? Like you said, you've been doing all these different things. Like, what surprised you?
What surprised me the most is coming in and there already being that existing group of people there. There already being the head of SBA Underwriting, the sales team, the credit officer, and me coming in and saying, here's my vision, here's what I want to do. And this can sound cliche or corny, and all of them being like, yeah, we're on board. We have that same vision. I didn't get any pushback from there's no credit officer that said, well, I did one of those deals in '85 and it didn't go well. There was none of that. And almost every place I've been in my career, there's always been something where, you go in there and you're like, I wish I knew that going in.
Mm-hmm.
That hasn't, and I've been there long enough now where I think that would have happened.
Right. Sure.
So going in and having all of these people as excited as I am to build this out and to build out a national platform, and looking at what I'm putting together for origination guidance and deal structure, and just being fully on board and saying, yeah, that's what we think too.
That's awesome. Yeah, because that could have gone either way.
And that's happened to me before, where I thought I was,
who's this guy?
Everything was what what I was expecting, and we were all on the same page, and then going in like, no, that's not going to work for us. That hasn't happened here.
I think I'm going to wrap it up here, but I want to ask you this other question, because you kind of bounced back and forth between management and sales.
Yeah.
Talk to me about that. Say more.
Yeah, and that question's been asked of me by a few people. Like, what do you like more? Is it hard to go from, because I did go from running a division to going back into a BDA role and then back into management. I've done that before. I think in my true sense of what, how I grew up in this industry was on the sales side, but I feel like I have a really strong credit background. I like both. There's on the sales side, sometimes I'm envious of the days where all I had to care about was me and my book of business, and I could kind of do whatever. You're in sales, right? You're on the road. Maybe you're not doing a lot on Friday afternoons. Sometimes I miss that. And that's probably one of the bigger benefits of just being a salesperson, is you kind of do what you want to do. And
Life was so simple back then.
As long as you do volume, right? But, I kind of was drawn back to the management side because I love building things, and I love, putting teams together and accomplishing what I think we're going to accomplish, and working with, a collaborative team effort in putting all of these pieces together, so that, we're doing another interview in 4 and 5 years and you're talking about, what we've built.
I would expect you're in the top 10 in 4 years, because now you've gone on record saying you want to.
Right, yeah. I want to. It's not.
Not we will.
Right, I said I want to.
A lot of people make bold claims on this. We had somebody, say we want to go to number 1. They were already in the top 10, I think, or top 15 or something. I was like, Live Oak's in the number 1 spot. You just called them out publicly.
Right. Yeah.
That's fun though. We're competitive,
Yeah, I'm not calling out Chip publicly.
Yeah. Well, we're gonna edit this in post, and we're gonna make your mouth look like you did.
Look like I did, yeah. That's I mean, to say you're going after Live Oak's a pretty lofty goal.
Well, it's not like you're coming after them, but like if you want to be the number one,
yeah,
and they're the number one, then you have to then do more than them,
right? Yeah.
So
that's a big number.
It's a big number.
I'm not making those bold predictions.
Well, they've since gone backwards in the rankings, so. Anyway, it's fun. You know, again, we're competitive as salespeople coming up through this. Even when you're a BDO and you see the internal rankings.
Right. Oh, those are my favorite. Yeah. That's one thing I need. We don't have that in place here yet where, you know, so this happened at Live Oak and at TD where, well, Live Oak, you could see it every day. But at TD, it was every week. I think it was like Monday morning. The email went out and it had the rankings, and it was back then it was myself and a guy named Jim Vigna, but it wasn't fair because he was in New York City, I was in New Hampshire, and his average deal size is like 50 million, so it's just not even fair. But it was you know, it was fun banter with the BDOs and
it is
who's number one and where you're at in the rankings. But,
I know I had, you know, definitely some good rivalries back in the day. I would obviously be number one, obviously.
I would expect no less.
And I would, you know, the person that was number two, I started calling him number two. I wouldn't even use his real name. Anyway, we have fun. Listen, is there anything else that we need to talk about before I send you off on your journey to the top 10?
I mean, we didn't get into basketball at all.
I don't watch sports. Like women's?
Yeah, I coach, you know, high school girls varsity basketball. So
that's right.
Probably my biggest personal passion is coaching. Girls
it's
basketball.
Interesting. A lot of people are coaches for their kids' teams. Like I was just talking to Kevin Gilligan. He's in Bank of Tampa, and he's his son's football coach. And who else? Oh, Ryan Kroge is like his daughter's track coach.
Really? Yeah.
It's very cool.
Must be something within the SBA industry, right? We're all coaches.
And you must have been very excited with all that WNBA stuff going on.
Yeah, the WNBA and you know, they just recently had their draft, which was big because of Caitlin Clark and all that. Yeah. NCAA college, you know, women's basketball. I watch way more of that with my daughters than probably any other sport.
I don't do sports, so I'm kind of out of my element here. Right. Would you like to talk about any other SBA things?
No, I think we covered. I mean, a lot of different things, and I can't think of anything else that we didn't cover.
Well, listen, man, I wish you luck. You're a solid guy.
Yeah, thank you.
I really appreciate you doing this.
I wish you luck as well, and maybe we'll be battling out for ranking spots.
I predict in 10
future.
years from now, we'll be up there battling it out. Nice. I got a ways to go.
Maybe this year it'll be like who's 100, 101.
Yeah, there you go. Race to the top 100. You're already there.
Yeah, that's true.
All right, man. Jonathan, thank you for joining us.
Yeah, thanks for having me, Ray.
It's been a pleasure.
Yeah, definitely. Thank you.
All right, that's it for this week. Don't forget to subscribe to the podcast so you never miss an episode of The Art of SBA Lending. And if you have any feedback or suggestions, email me at ray@artofsba.com. Until next time, ta-ta.